Recording in progress.
Hello, fellows. Welcome back to today's topic. And we shall wait for another 3 minutes for the others to get in. And then we shall start on today's sections. And today's will be like another advanced sections of the technical analysis which has been taught on the last Tuesday, I guess, if I'm not mistaken. And today is more like a continued class for that. Good evening, everyone. I hope you guys can hear me loud and clear. And today is going to be a advanced technical analysis lesson for whoever that want to learn about technical analysis. And yeah, if you are checking on my chart, this is my latest trade that I have taken, and it is in profit. And yeah, we shall wait for another 3 minutes for the others to get in, then we will start on today's section. Make sure to prepare your notes if you want to just write it down or do your own notes. I'm not sure whether I will repeat for the sessions or not. So yeah, so if you want to just mark it down, make sure to prepare your own notes, yeah. And we shall start our sessions on maybe 3 minutes later, just for others to get in. And it's Monday again, so Monday Boo. And then in this week there will be a lot of news that is going to release, a lot of numbers that is going to release. On tomorrow there will be like a PPI, and Wednesday, I'm not mistaken, it will be CPI and continuously. And also on Thursday there will be an unemployment rate. So in this week, the market, the US market and also the forex market will be a lot volatile when comparing to the previous week. So make sure that you do not trade the news, yeah. Trade the news is a very dangerous move, as it's more like a little bit of gambling when it comes to trading. I always do not trade the news, but you can just ride on the rally of the news. After the news is released, after the direction is confirmed, then maybe you can wait for a pullback or another breakout for the continuous trend. So that might be a way to do it. So and yeah, so when the news comes, there will be volume, and also there will be a lot of momentum. So you can just ride on it, but make sure to not trade the news. And if you are not very comfortable with this kind of volatility, you can just skip for those news days also. If I'm not mistaken, only I think it's only Monday and Friday doesn't have any news, and on the other days there will be a lot of news. Okay, so I will just give a little bit disclaimer before we start. And for today's sections, maybe we will go through a little bit of chart, but there will be no trading signals, no trade call, no buy call, no sell call for you guys. And this is all for education purposes. And if you want to do the trades after today's section, you need to do your own due diligence and make sure that you need to study a lot and take the responsibilities of your own trade. So there will be no trades call, but yeah, we will just go into the chart directly instead of the PPT. And if you follow me on the last Tuesday, we have talked about the technical analysis thing. And today you more like a go in details after the lesson. So today we will talk about the time resonance and also about the correlation, about why I'm doing so, why I'm using these two things to just make my trades more even precise, and instead of just digging into the same chart on and on. Let me check on the time. 1 minute left, then we will start on today's section. Not a bad trade for today's breakdown on the two support, and then it come back for a retest, and then it continuously to have a continuous movement downwards and fill this wick. This is what we call a wick fill. But I didn't just target at the low. I click on 1 to 2 wicks to lower it fill. If you cannot hear me loud, then do let me know. Yeah, I will just adjust my volume a little bit. Okay, I guess it's about time, so just start on today's section. So welcome you guys again, and then today I'm going to talk about technical analysis, and then you can use it in whatever asset that you want to, maybe US stock, forex, cryptocurrency, and also futures and anything that you like. Commodities also can. So this is a very useful class. After you utilize, you can just utilize it in whatever asset they want to trade. So make sure that you just note down whatever that is important to you, if you think that is important. And my way of doing the technical analysis might be a little bit different when comparing to the others. So yeah. And just before we start, I will just give a little bit introduction of my own. I am Hujalo, and I came from Malaysia, and then I have 4 years of experience in fund management and 2 years specialized in quantitative analysis, the algo board trade building stuff. And then I also help the other to manage their funds and then achieve an annual return about 26 to 33%. It might not be a lot, but at least I think it is very stable when it comes to the absolute drawdown, about 4% something else. Okay, so it might be not that much if you want to look for like flipping and things, but I think stability is what I'm looking for lah. So I would prefer to just have a lower drawdown and then have a very stable income instead. And then just start on today's section. Yeah, I'm specialized in cryptocurrency trading, CFD, commodities, and also options trading. And yeah, you may approach me and ask me whatever thing that you want to. So we'll just start on today's section. Last time we have talked about the time resonance and also correlation. So today we will just go into detail of how I'm utilizing this thing and why I'm doing so instead. So let's say that maybe we need some example to just look for it. And do you guys have any chart that you want to go into analysis? If you don't, then we will just go to stick on this goal instead. Yeah. If you do have any chart that you want to go with, then maybe you can just use that instead. And when it comes to technical analysis, many people might teach you on how to do the analysis on one chart, like how to what is the indicator that you want to use, like how to combine all those indicators like EMA for the trend direction and also RSI for the entry. And also they might think that you can just use a naked chart and then use some concept like smart money concept and inner cycle traders things to just have a very precise interpretations of the chart patterns. But actually I think that even though you keep on digging into the same chart, the information that it provides to you might be limited. And what you need to use is the other way to do the analysis instead. Instead of you just sticking into the same chart, you may using time resonance, which I identify it as analysis by using multiple time frames. And then you also can use the correlations to just increase your win rate instead. And these two things is my secret weapons to just increase my winning rate instead of just sticking into the same chart. And previously I also joined a lot of classes and they teach me a lot of things like how to identify support resistance and also the order block, fair value gaps and whatsoever, like liquidity swap and all of those things. But somehow I find that it might not be a very good approach to just heavily interpret one single chart. Like, even though you do many things on this chart, the chart will just stay on the same way like it is. So maybe you can just look for the other way instead. So personally, I was using different time frame to do so. Why? Because first of all, you need to understand that what is the trade that you want to hold, what is the trade that you want to do. Like if you want to do a scalping type, if you want to get in today and then you just exit in a few minutes later on, then you might use a smaller time frame to do so. And then you can use a bigger time frame for the trend direction confirmation. And then if you want to hold for longer period, then you might look for maybe 1 hour time frame. Then you can just hold for several days and so on. So first of all, you need to decide that what is the time frame you want to trade. Now let's get into the first topic, which is the time resonance. So we'll just leave the correlation aside first, yeah. So the first thing is you need to decide on what is the time frame you want to trade. So if you are day traders, then you might use a smaller time frame like 5 minutes, 1 minute and 3 minutes. But if you are not a day trader and you are like a swing trader, you want to get in the positions and then maybe you hold for several days or until a week or few weeks, then you might look for a bigger time frame like 1 hour and 3 hours and 4 hours. And it doesn't matter that what is the time frame that you use, but this is the first step that we need to take, because we do not go into the analysis of the smaller time frame. This will just restricted that the smaller time frame that you are going to trade. Let's say I am a day trader, then I'm just going to look for minimum 5 minutes, and then I won't go into the chart of 1 minute and 3 minutes. And if I'm going to do a swing trade, then the minimum time frame that I'm going to look for might be an hour. And that is that's to define that what is the minimum time frame they want to trade. Then later on, you need to understand that the strength of the trend and the relationship between the strength of the trend and also the time frame that you use. Because the trend on 1 hour will be stronger than the trend on 5 minutes, and then the trend of one day chart will be stronger than the trend of 1 hour chart. Why is this so? It's because that the money and also the number of trades that is required to change the market structure is a lot higher in the bigger time frame. So it's unlikely to make a fake move. So once it decided on the direction, it's highly likely to just continue the trend for a while, at least a while. Then maybe you can just get in the trend, and then you are a lot safer when you're comparing to just trading the smaller time frame. So if you are using a higher time frame, then you have more, you have the direction on your bias. You are in the same directions that provide you a higher win rate. So you need to understand that the higher time frame, I will use a shortcut instead like time frame. This one also. I think this is way too big. Yeah, make it smaller instead. Okay, so the trend on the higher time frame is a lot stronger when comparing to a trend in a smaller time frame. And this is the reason why. It's because the number of trades and the money that required to just change the direction of the higher time frame is a lot bigger when comparing to the money required to change the direction in a smaller time frame. So once the higher time frame direction is changed, it's unlikely to just make a big move. So it's have a very high probability to just continue on that moment, on that direction instead. So if you are going to just trade on, let's say I'm a day trader, for now, the first thing I decided that I need to trade on maybe 5 minutes. Okay, the second thing is I will check for the higher time frame directions. Why? Because there are two ways to do so. Let's say that I'm going to check for 15 minutes and also 30 minutes instead. There are two ways of doing things. The first one is you are trading the direction in smaller time frame. And then you hope that it will just change into a higher time frame direction. Let me explain why I'm saying this there. Let's say that in the 5 minutes, it has the move like this. And then you identify it that there is a strip of structures here, which you want to do a downtrend instead. Short. And then, whereby this thing is actually in one of the, when it switch to a higher time frame, it actually just look like this. Wait a second, yeah. Whereby this thing is actually just part of this, and then you hope that the shape of structure here, is going to change this one also. Like it will just this one is still an uptrend because there is a higher low, higher high, higher high, higher low. Is it? But this one there is a head and shoulder pattern, and then it breaks the previous low, and then it changes to a bearish movement. And then once you get in here, you are hoping that you will change to a higher time frame direction. You will break the higher time frame low, and then it will become a higher time frame bearish bias. And there is another way of doing things, which is you decide the directions on a higher time frame. Higher time frame, and then you look for the entry in lower time frame. Yeah, I think this is way better if I'm writing this lower time frame. So, shift the direction. And then it will switch to, okay. So the other way of doing things is, let's say that you already know that in higher time frame it is in it's in an uptrend, it's in a bearish movement. Then you only inside that box you are only looking for a bull setup, a bull entry. So let's say that in this thing you are not looking for this kind of thing. Maybe you are looking for another smaller break of structure inside that. Let's say that in this area, so that you will just get in here like this one here, and then you are continue riding the bull. So there's two ways of doing things. One is you decide that the direction that you want to trade in a lower time frame, and then you just hold the trade until it becomes a higher time frame trade. The other one is this one, which you identify in the higher time frame, and then you look for entry in the lower time frame. I would say that this winning rate is way better when comparing to this one. Why? It's because that in this one, even though that in this case you may catch the top or the bottom of the trend reversal, but this win rate is lower. Because why? Because the trend in the higher time frame is stronger than the lower time frame. So in this one, this is in a bull. It's going up, but this one is reversing. So what is the probability that this one will go down and continue to break this down? It's very unlikely to happen. So normally this one will create a higher low, and then you will just continue to go up, and then you will make a cut loss here. This is why that a reversal in a smaller time frame is very difficult to just shift into a direction in a higher time frame. Whereby I would suggest you guys to just check for the higher time frame and only look for the entry in the lower time frame. So in that lower time frame, you can just focus on one direction instead of you just trying to figure out what is going to happen. Is it going to turn down or is it going to go up? So you can just focus on one specific setup, one specific direction instead. So I would prefer you guys to just check for this one. So how are you going to do so? First of all, you'll just check for the direction in a higher time frame. Let's say I'm going to remove all of these. Yeah. Okay, let's say that I'm going to trade for a 5-minute chart, and then I'm going to look for a trend in 50 minutes, 30 minutes, so that I can know that what is the direction in a higher time frame. Then I will only come into 5 minutes to look for the entry. So let's say that in this case, this is a way in this chart. There's a break of structure here. So this is 50 minutes, right? So once it breaks down and then it creates a lower low, then we are saying that the 15 minutes is downtrend. Okay. $15 minutes is downtrend. And then what about 30 minutes? If we switch to a 30 minutes, it seems like the same thing happened. It's just breaking the same low also, and then this one, the 30 minutes and also the 15 minutes share the same bias. In this way, when you are going to do a day trade, you are going to look for a lower time frame, and then you are going to just search for a bearish setup. Maybe the break of here, the break of structure here might be a very good setup because it make a lower high and then it continue to make a lower low. So once it breaks down, the momentum tends to be going down. So and also, how do you utilize the different time frame things? Let me give you an example. When you are drawing the support and resistance, do you think that the support and resistance for 15 minutes and the support resistance is 30 minutes, which one is stronger? Let's say the 15 minutes support is here and the resistance is here. So when you go to 30 minutes, it seems like the resistance is a bit lower. Is it? So this is how you utilize the time resonance. When different time frames have the same support and resistance, then the support resistance will be high likely to be solid. So it will be maybe hold the level, or the break will be much stronger instead. So instead of you just using one specific time frame support and resistance, you may consider to use multiple time frame support and resistance to combine together. And then to do so, you may using this indicator, which is called the ICD high time frame candle. In this one, you are able to just check for multiple time frames in one single chart. Let's say that you switch to 5 minutes. And then in 5 minutes, you are able to check for what is happening on the 15 minutes and also the 30 minutes. And if you are not, if the candle is not enough for you to do the analysis, you may just switch the number of candles here. And then I don't think this is necessary, though. Let's say that, yes, let's say that in this scenario, so that you can see that in the 30 minutes, it forms the first green candle, and then whereby in the 50 minutes, it forms a support, it comes to retest, and it is going up right now. So this support is currently testing, and then it may hold or it might not hold. And then you can just check on the 5 minutes. So the 5 minutes is going in a very good bearish movement, like there will be a lower low, lower high, and all those things. So so the support here, the support in this level are likely to hold. Why? Because in 30 minutes it forms a green candle, it forms a first support, and then in 15 minutes it also forms the support in the same level. So you might find that in the other ways it might not be the same, like this one. In the 30 minutes here, it keep on retesting this one, this level, but in this one, but it doesn't test the same level. Instead, it's just directly breaking down without having a very strong support standing here. So in this case, this support is actually not a very solid support when it comes to the time resonance analysis. So you may be using different time frames to find a support that is holding for different time frames, and then you may using this support to do your trade instead. So instead of just using the support and resistance in one single chart, you may use the support resistance that is hold on different chart instead. So let's see what we can do with the time frame again, yeah. Where is my thing? Never mind. So first of all, you need to decide that the direction, the time frame they want to trade. So let's say you are doing a day trade, then you are going to use a 5 minute. Then you are going to use a higher time frame to check on your direction bias. You do not check on the direction bias on the time frame that you are going to trade. Let's say I'm going to trade for 5 minute time frame. Then I will not look for any direction bias in 5 minute time frame. I will look for the bigger time frame direction. Let's say 50 minutes, 30 minutes, 1 hour, and so on. And then I will just going to trade for, I'm going to look for a lower time frame entry only. So as simple as that. And that is how you're going to do a trade. So when it comes to a contradict conditions, whereby let's say that the 30 minutes is in a upward momentum, but the 15 minutes is in a downward momentum. In that case, you doesn't have the same bias on all the time frames. So in that case, what do? I will suggest you just click on this chart. If you come to the chart and at the first second you are not aware of what is the direction that you are going to trade, you can just skip for today. You don't need to take every necessary chart. So the first thing comes to the trading is that you need to trade for very strict and clear direction bias. So if you do not find a direction that you want to trade in the first second that you saw on the trade, you will just skip for today. So let me just use, personally I was using this I would say EMA instead, because I want to make sure that all of my trade is in a very disciplined and consistent manner, so that let's say the trade that I take for today, I will do the same decision after a few years. So if I'm using a naked chart, then I will afraid that after a few years, my concept to the naked chart might change. My interpretations to the naked chart, the lower low, how to identify the support and resistance, all of those concepts might change according to what I'm thinking at that time. But when it comes to indicators, it's written by mathematics, so it doesn't change no matter what. So I would like to have my trades in a very disciplined and consistent manner, and that's why I'm using an indicator instead. So let's say that I'm going to trade for gold in this scenario. I'm going to trade for a 5-minute chart, and then I'm going to trade for tonight. What happened is I'm going to look for a higher time frame. Now the higher time frame is below the EMA, so I'm going to look for a short, a bearish move. And then in 30 minutes, it is breaking this, it is under the EMA, and then it's holding on the 200 EMA. And then what happened is, if it just break down and close below, that will be a very strong bearish signal for me. And then you can just check for 1 hour also. The 1 hour, it is also crossing down and then closing below the EMA. And eventually, it will just lead to a dead cross instead. So you can see that all of the time frame is having a very strong direction bias in bearish instead. So when you come to day trading, you can just look for a bearish setup. No matter if a liquidity swap in this area or is continuous breaking out in this area, it is also a very good trade. At least you follow to the direction of the higher time frame. So the 15 minutes support you to go for short. The 30 minutes also support you to go for short. And also the 1 hour is also supporting you to go for short. That in that manner, all of the time frame is providing you a very strong support to your analysis. So instead of I'm just thinking, let's say that I'm going to trade for a 5-minute chart, I'm just keep on thinking that, oh, it might break down here, and then it might just have a shape of structure when you break this one, and then you just go up instead. But that would be a very dangerous move, because I'm very considering both directions instead. I'm going to, in my mind, if I'm just going to check, do the direction bias in this 5 minutes, then I will need to consider many scenarios. Once it breaks this one, is it a liquidity sweep or is it a sweep of structure? So there will be many things that are going in my mind. So to make my trade simple, I need to confirm my direction bias with the other method, which is using the higher time frame. So in this way, once it breaks this up, I am only looking for it to close below to make a liquidity swap. So I'm not looking for it to just have a sweep of direction. Even though it had a sweep of direction here, what happened is I didn't make any losses, because I didn't go for once it breaks and it didn't just close below, I won't go into the trade, and then I won't have any losses also. So even though I didn't make any profit at that time, but I didn't have any losses also. So that is how I'm using the time resonance to my analysis, to use for the higher time frame for a direction bias, and also the higher time frame to check for the support and resistance that you draw, is it on the same level or not. So to make sure that the support and resistance that you use are solid on every time frame. At that moment, that support and resistance will become a very solid support and resistance to be referenced, to be considered. So if that is a very weak support and resistance, then you might just consider to do it on the other support and resistance level. And then that is the first section of time resonance. Now we will talk about correlation. Why I'm using correlation instead? Let's say this one is XAU USD, right? So this is actually the gold price versus the USD dollar strength. So if you learn about mathematics in this way, this is actually calculated XAU USD is actually calculated by using the gold price divided by the USD price. So in this case, if you do learn about mathematics, if the USD is going strong, then this one is going to drop. So if USD is going weak, then this one is going to up. So as simple as that. It's purely mathematics. And then how you are going to check for the USD? So if you are now you are having a bearish direction bias on gold, right? So what I'm looking for in USD is actually I'm looking for a bullish movement, because the gold and the USD dollar is actually have an inverse correlationship. So if you are going to do for this one, you may just check for the USD strength. So if the USD strength is on a very bearish or bullish movement, then it will be in the same direction. So now you can see that the DXY, the US strength, is actually in the bearish movement also. So you can see that the gold is dropping, the USD dollar is also dropping. In that case, the correlationship doesn't form a very solid support to your analysis. So in the previous analysis of the gold, we only had the higher time frame support, and we didn't have the correlationship to support. And also you need to know that the correlationship is actually just a supporting factor. You do not get confused. Do not use it as the main reason for you to get into your entry. You do it in this way. Let's say that this one is changing the trend. It make a shift of structure here, and then it's going to, let's say that it's breaking this, and then it goes from a bullish movement to a bearish movement. Then at this moment you go to the chart of gold, and then you look for long. Don't do it that way. This one is only a supporting factor to your main analysis. This will not become a main reason for your analysis and your entry. Okay, so this is how you do it. You're only using it as a supporting factor, so you can just do your trade, record it down and generate it down, and then you will find that if this correlationship help you or not. If it doesn't, then you will just leave it. Okay, so you can just using a many higher time frame instead, and then you journal down, you record down, and then if it doesn't help, you can just abandon that and use another technique to do so. So let's say this is actually one of the correlationship. What if you are going to trade for Bitcoin? The thing is, Bitcoin is actually, let's say, BTC. Bitcoin is also having a correlationship with USD. You can see that the Bitcoin is actually calculated by using the price of the Bitcoin divided by the price of the USD. So when USD go down, Bitcoin will go up. So this is also in the inverse correlationship with USD dollar. And then in the other way, you can also check it with the other method. Let's say that you can check it with CoinMarketCap. Why? Because for the Bitcoin to go up, it need money for the inflow. So let's say that this is the whole market, and then this is the cryptocurrency market. So for the cryptocurrency market to grow, the outside market need to have money inflow. In this way, this only can grow. So what you need to consider is the money inflow into the cryptocurrency market. And you need to understand that USDT, this is a little hint, USDT is the most famous stablecoin that is using as an entry for the inflow and also the outflow. So you can actually check for the market cap of the USDT. when you go to this one, you check for the market cap, and then in 1 year's time, the market cap for USDT is increasing. What does it mean? It's meaning that in 1 year time, people keep on converting their currency, either USD or RMB or MYR, whatever, any currency, and then keep on converting their currency into USDT, and then they just use the USDT to make their trade. So this is how you checking from the macroeconomic correlationship. So you can check for the USDT market cap to check that the inflow and outflow to the market. If the market cap for USDT is decreasing, what does it mean? It's meaning that people are selling the Bitcoin and then they are converting back their USDT into their currency, and then they withdraw from the crypto market, and then they will just quit the market instead. So if the USDT market cap is dropping, which means that people are actually drawing their money from the crypto market. So in order for the crypto market to grow, or in order for the Bitcoin and other altcoins to grow, the USDT market cap needs to be in an uptrend. If you remember that in the previous case that Bitcoin dropped from 65 to 16,000, 65,000 to 16,000 in last year, and that time the market cap actually doesn't increase, and in fact it decreased a little bit more. So that is actually a very good hint for you to do your trade in cryptocurrency. So let's say if you didn't trade for the commodities, and also you didn't trade for any index or any cryptocurrency. If you trade for stock, how are you doing? Are you going to do the correlationship? You can actually use it by using the correlationship with the same factors. Keep on loading. So you can see here, if I'm going to trade for, let's say, I'll say a bank, because the bank is going to release the earning report so soon, right? So let's say I'm interested in trading bank. So there's and if I'm not mistaken, in this week there will be JP Morgan, Citibank, and also the Goldman Sachs to release their earning report, and I can just check for this one, and in here you can just switch for the performance. Personally, I didn't check for the 1 day performance because 1 day doesn't mean anything in the longer time. So let's say I'm going to check for 1 month performance, and then I can see that actually in the bank sectors, everything looks in red. So it's unlikely to one of them to be the unicorn. So you can just check for the correlationship to the other stock in the same sectors, and this thing is actually very difficult to find because in the sectors there are many stocks, and then when everyone is dropping and then one of them is outlier instead, it doesn't really to happen. So let's say that I'm going to trade for this semiconductor sector, and then I look for one of the stocks, and then what is the direction bias that I'm going to have? It will be better if I'm going to do a short instead. I'm looking for a bearish movement instead. Maybe I'll just quit my position, or I'm going to do a put option instead. So that in that case, I will be enjoying for the bearish movement. So if you are going to do for a bearish situation for this, then the success rate for your cases will be a lot higher, because among all of those stocks, it's unlikely to you to just pick on something like AVGO, you know. So that the Broadcom is outlier in this sector, and then if you just choose on the other stocks in the semiconductors, then all of them you are in profit, you know, because all of them is actually dropping, just except the Broadcom. So if you are going to do for the trading in, okay, let me summarize once again. Yeah, for core relationship, for commodities, you can check for the core relationship with the inverse currency. In this case, which is the USDT, the USD. And then for cryptocurrency, you can check for the core relationship with USDT. And then for the US stock, you can check for the core relationship with the other stock in the same industry and same sector. That is how you are going to use the core relationship to increase your win rate. And then personally, I'm actually using Notions to just track on my news, my personal trade, so that I'm aware of what is the winning rate of every setup in my cases. Still loading. Sorry for my bad line. So let's say this one. I'm going. This is the trade that I take on the October 30. So what happened is I identified in one hour's time frame that is an uptrend, and in 30 minutes it's also an uptrend, but in 15 minutes that is a downtrend. So in this case, majority is supporting me to do for an uptrend. And what happened is I do on the trade on this one. In 1 hour, this is actually an uptrend, and then in 30 minutes, it is also closing above the EMA, so this is also identified as an uptrend. And then in this 50 minutes, this is closing below, which I identify as a downtrend. So what I'm going to do is actually I'm going for a long, and then I'm going to do a switch of structure in this case, and then I took a profit. So as simple as that. I'm using the core relationship as a support for my analysis, and then I decided on the direction, and I'm looking for a lower time frame entry to get in on the chart. As simple as that. So make sure to do your own journal, mark down your trades, so you can know that what contributes to your win and what is the factor that can just make your setup have a higher win rate instead. And I think that's for today's class that talk about the time resonance and also the core relationship. So if you guys have any questions, wait a second, yeah. seems like you guys don't have any questions, and then I think we should end our sessions right here away, and hopefully to see you guys once again up later on. And at the end of the session, just let me share a little bit of my own contact, so you can just contact me if you want to. Let me just flip the chart. Okay. So this is actually my Telegram and also the VCOM contact of myself. So if you want to contact me, feel free to do so, and you can just ask me anything you want. And once a disclaimer again, today's class, it won't be any trade calls, and this is only for education purposes. If you have anything unclear, then you can just contact me and you can ask me anything you want. And other than that, you can also discuss me with anything that you want to, and maybe we can just arrange for a session for that. And that's it for today, I guess. So thank you guys for support, and then hope to see you guys on the next sections. The next section, I guess, will be on Thursday, and then on next Tuesday, I'm not sure what will be the topic again, and then I will just announce it on the next classes. And I think I'm actually planning to just make a group for Telegram, and there might be a freedom for us to discuss on anything that we want to, maybe a chart analysis and whatsoever. So a Telegram group actually provide a lot of freedom to us, and if you are interested to that, do let me know. And once we get the minimum people required, then we will form a group on that. Thank you guys for joining, and then hope to see you guys again on the next section.